Many new traders in the market often look at easy ways of making money, particularly from derivatives, especially from options. In this video today, I'll talk to you about a technique that many new option traders think is an easy way of making money, but I'll explain why it is not. So do watch this video completely to understand what you should be doing and shouldn't be doing when it comes to options trading. Hi, this is Karthik Rangappa and welcome to another Varsity video. Take a look at the screenshot. I took this on 21st June 2024, roughly at around 3:15 p.m. It was Sensex expiry and it was a Friday. From this screenshot, I want you to pay attention to these four things. The spot value of Sensex, the premium at which 77,200 put option is trading, the premium at which 77,300 put option is trading, and also remember the screenshot was taken at 3:15 p.m. which means there is 15 minutes more for the contract to expire. Now that you have the data in front of you, I have a question for you. What do you think is the intrinsic value of 77,200 put option and the 77,300 put option? Maybe you can pause this video, do the math quickly, and then get back. I hope you were able to do that math. If not, let me help you quickly identify the intrinsic value. Since we are talking about a put option, the intrinsic value of a put option upon expiry is the difference between the strike price and the spot price. Now, from the screenshot that I posted earlier, you may recollect that the spot price of Sensex is 77,158. Therefore, the intrinsic value of 77,200 put option would be 77,200 minus 77,158, which is 42. Likewise, for the 77,300 put option, the intrinsic value is 77,300 minus 77,158, which is 142. But where are the options trading? Well, the 77,200 put option is trading at 10 rupees 65 paisa, which is roughly 31 rupees lower than its intrinsic value. And the 77,300 put option is trading at 102, which is roughly 40 rupees lesser than its intrinsic value. At first, it may seem like the market is mispricing these options. After all, options are supposed to be trading at its intrinsic value, if not more. On the contrary, these options are trading way below their intrinsic value. Now, don't you think it's a great opportunity to buy these options? After all, expiry is just 15 minutes away, and if you were to buy these options now, 15 minutes later upon expiry, you're going to get the full intrinsic value of the option. This is literally free money staring at you. All you have to do is press that buy button and buy these options. But remember, if something looks too good to be true, then it isn't. This is my thumb rule in the market. In fact, many new option traders believe that this is a great opportunity and end up buying these options, only to see their capital erode trade after trade. Now the question is, why are these options trading below their intrinsic values and why you shouldn't be buying them? Well, there are a few technicalities here. Remember, to calculate the intrinsic value of an option, we always consider the spot price as one of the inputs. On expiry days, the closing price of the spot price is determined based on a layered pricing mechanism. First, the closing price of the option strike is based on the spot price of the underlying, that is Sensex. On the expiry day, the spot price of Sensex is based on the closing prices of the stocks that make up the Sensex index. The closing price of the stocks itself is based on the volume weighted average of the last 30 minutes. So you see, it's not straightforward. You can't just look at a strike price, figure out what the intrinsic value of the strike price should be, compare that to the premium, and jump in to buy those options. There is a lot more going on expiry days. On non-expiry days, the closing price of Sensex or Nifty or Bank Nifty is not dependent on the closing price of its underlying constituents, but rather the contract's volume weighted average for the last 30 minutes is considered. Therefore, on non-expiry days, if you happen to see an option whose premium is trading below its intrinsic value, then maybe you should evaluate such opportunities. But on expiry days, like I explained in this video, do remember that there is a lot more going on. I hope you found this video helpful. Comment below and let me know your trading experience on expiry days.